Today, I want to talk about the seemingly new investigation covering AMC, GameStop, and meme stocks. Now, I do also want to touch on how useless the SEC have been so far, but also how at risk these hedge funds and market makers are to major market movements. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, it all started a few days ago when G-Man tweeted saying, hang on, did they just admit to fraud? This attached screenshot is a news article saying don't touch it, treat GameStop stock like a hot potato, saying don't expect regulators to ban naked short selling and miraculously rescue GameStop stock. So this is literally the mainstream media admitting that naked short selling does absolutely exist, and it also absolutely exists in GameStop and by and large AMC as well. Now that was obviously tweeted 2 days ago about an article released the day before, and check what's just come back from a Freedom of Information Act request. So Gian also tweeted about the AMC investigation that's ongoing, hence the reason we can't see the first half of October's FTDs. As Bigham's tweeted, he said, so we can release the second half of October FTD data, but not the first half. And as Chef Ape added, he said you can't release it to the public if the data is part of a criminal investigation. The Real Truth added these screenshots saying, per my Freedom of Information Act request, there is already one going on. So this request relates to forms of direct communication surrounding meme stocks, AMC, GameStop, and dark pools. And it says the search for responsive records has resulted in the retrieval of 730 pages of records that may be responsive to your request. Access is granted to just 139 enclosed pages. The reason why all of those other pages can't be disclosed is due to one of these bullet points. The Freedom of Information Act Exemption 5 protects records prepared in anticipation of litigation. Exemption 6 protects records that result in a clearly unwarranted invasion of personal privacy, which obviously doesn't apply here. Exemption 7A protects from disclosure records compiled for law enforcement purposes. And even added specifically saying the remaining 591 pages are being withheld in their entirety under Exemption 5 and or Exemption 6, which is for those records prepared in anticipation of litigation. So they're withholding nearly 600 or 591 pages of information related to meme stocks, AMC, GameStop or dark pools due to prepared anticipation of litigation. And that's also likely why they can't disclose the first half of October FTD data due to potentially that very same investigation. Now, obviously, as I said at the start of the video, I did want to specify on just how useless the SEC and the Department of Justice has been so far over the last 2 or 3 years. Also guys, you can currently get up to 15 free stocks with Moomoo, all worth up to $2,000 each, and 5.1% interest on any spare money by signing up using the link in the description below. With Moomoo, you can trade in the pre-market, they've got options trading, they've got tons of technical indicators and advanced charting tools as well. And signing up with Moomoo is also a great way to support the channel. They've done literally nothing that we know of over the last couple of years because there's been no announcements. Is that because there's been an ongoing investigation into these hedge funds the entire time? Or is it more likely that many of these employees at the SEC actually want to go and work for these hedge funds and therefore simply ignore any crimes they commit? I've kind of covered that a lot recently in some of my previous videos, especially as Elon Musk was talking all about it in a recent interview as well. We know there is a revolving door about SEC attorneys and employees that would love to go and work for these hedge funds or big law firms that do business with those hedge funds. We also know about many of those employees that value money and potentially their future careers over doing the right thing and actually stopping criminals. But I also wanted to talk about this tweet from StockSense Frank about the blanket short selling ban in South Korea, saying global investment banks like UBS, JP Morgan and others have criticised a blanket ban on short selling imposed by South Korean regulators last week. They're accusing authorities of bowing to the demands of local retail investors. Now, I don't know if they're bowing to those demands or just doing the right thing and stopping crime. But at least South Korea is actually doing the right thing and stopping these global investment banks like UBS from committing illegal short-selling practices. South Korean regulators are also setting up a task force to investigate illegal short-selling practices by about 10 international banks. So it's not just happening on one individual small company that's got no idea what they're doing. 10 international banks are all illegally short-selling securities over in South Korea. A representative from one of those banks being investigated has said that regulators have created a boogeyman and a phantom farce. They said the short-selling ban would make it harder to properly value listed companies and would deter international investors. To me, that just seems like one of these international banks is just simply trying to cover up the illegal short-selling they're committing and pretending like it's not happening, and even having the confidence to say that it's going to be very negative for Korean companies. It seems these big banks are trying to pretty much strong-arm the regulators into taking away the short-selling ban so they can continue committing crimes. What's funny is that some specific hedge funds even admit to naked short-selling in their financial statements too. Citadel tweeted about the Canadian fund PIMCO admitting to naked short-selling in their financial statements. It says here the fund may engage in so-called naked short sales when it does not own or have the immediate right to acquire the security sold short at no additional cost, in which case the fund's losses theoretically could be unlimited. Basically saying this Canadian hedge fund does indeed and happily naked short sell stocks, which is illegal. And also said they'll happily continue doing this until that time when they can replace the borrowed security or locate it for sale, regardless of how long that takes. But interestingly, Zero Hedge has also tweeted about these hedge funds and their exposure to big tech stocks, and effectively how culminated in one position they all are. Their tweet says there's no buyers left. Hedge fund net exposure to the Magnificent Seven was 12% at the start of the year, and it's now 99%. That's basically saying 99% of hedge funds all have exposure to stocks in the Magnificent Seven and have all maximum allocated their portfolios, or as much of their portfolio as they want to allocate, into these 7 stocks. Now that A means these hedge funds are way overexposed on a small number of non-diversified stocks, and it also means there's no more buyers to push these prices higher. So when these 7 stocks start falling, it's not just 1 or 2 hedge funds that are going to take on losses. 99% of all hedge funds out there will take on losses, and those losses will be extrapolated as these stocks fall further and faster. And obviously the more these stocks fall, the more hedge funds will be trying to bail out for the exit door, creating even bigger losses for those still remaining. And finally, this post here suggests the FTDs may be being hidden due to failure in the markets, or trying to hide and cover up that failure. It adds some sources and basically saying the FTD data probably isn't being released because clearing agencies are dropping the ball and struggling to clear trades in a timely fashion. I think it will be very interesting to see if the first half of October FTD data is actually released, and if it is released, when it gets released. Clearly they're trying to cover something up as they've already released the second half of the data, but not the first half. Usually, even if the first half was late or if it had problems, they'd focus on fixing the first half of the month first and posting that before even moving on to the second half of the month. I think they've been specifically told not to release the first half of October FTD data, obviously to cover up some giant mess. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.